Hello guys, this is fairbinaryoptions.com, and we are looking in front of the FOMC statement to come something like less than 1 hour. We are looking at the EURGBP 10 pound with some bearish eyes, because from my point of view what we have here on the market is a classical rising wedge that needs to let's say retrace quite some from this level. Therefore, what I would like to do here is, of course, to buy put options, and our rising wedge starts from these lows here to the upside, as is being part of a zigzag. What is our zigzag? Our zigzag goes like this, from the lows, or from here if you want, to the upside, to go 1, 2, 3, 4 and 5. This is the end of wave A. Then we have the B wave here in the form of a contracting triangle, A, B, C, D, E, and then the rising wedge. 1, 2, 3, so the third wave to be up here, either here or here, doesn't matter. 3, then 4, and then the fifth wave to the upside. And this is the whole pattern. Now, as you can see, we are talking about two different situations. First of all, this is being called wave A, this is being called the B wave. The B wave comes in the form of a contracting triangle. It is mandatory for the B wave to retrace at least 1% when compared with wave A. Well, it is retraced at least 1%. And then we're looking for the C wave to the upside, and this C wave to the upside needs to have a 5-way structure, mandatory. Now, the 5-way structure should be an impulsive move, but not any impulsive moves are the impulsive move that you know from the textbook materials and stuff like that. This one is being called the terminal impulsive move, and normally should travel like this within the 1 and 3 and 2 to 4 trend line. And as you can see, it has the look of a wedge. It is not a wedge in the common sense, but so the 2 to 4 trend line should not be treated exactly like that, but it is a terminal impulsive move, and normally such patterns are completely retraced by future price to come. So I'm talking about 82.91, and yes, I am bearish on the pair or on the cross, and this should be labeled of a lower degree, 1, 2, 3, 4, 5. Let me actually change the color so that you can see the whole pattern. So 1, 2, 3, 4, 5, 5-way structure, 2 to 4 trend line broken, a possible wedge. You have an extension for the first wave. All the rules of a terminal impulsive move are respected, with the, let's say, with the mentioning that, like in any terminal impulsive, like in any impulsive move, the first wave needs to be extended here, like in a wedge, and all these waves are corrective, so they need to be corrective waves. Even though they are corrective, they should be labeled with letters and not numbers. Therefore, sorry, numbers, not letters. Therefore, this should be our first wave to the upside. Then a classical second wave here. Then the third wave there, 1, 2, 3. Like here. Then the fourth wave here. And of course the fifth wave to the upside. And just like that, 1, 2, 3, 4, 5, 5-way structure, rising wedge in the form of a terminal impulsive move. What do we want to do here? Well, we want to buy put options still. So let's write here that we are buying put options with end of week expiration date, as we want to avoid as much as possible the volatility that is going to come surrounding this FOMC statement and event in less than 1 hour from now. Now, thank you very much for being here. Again, this is fairbinaryoptions.com, and all these analyses and recommendations are possible due to the help of our sponsor here, Lionize. So, have a great day and stay safe on the markets. Bye-bye.